both of you have about 10 headwinds or serious issues that the market could probably have to deal with, but both of you say, you still think that it's something you have to be involved with. Kristen, is that about right?
Yeah, I think that is right. So investors are naturally anxious, but I think one thing to just point out is a couple of weeks ago, investors were anxious actually because of the lack of volatility we were seeing in the market. Realized volatility a couple of weeks ago was at the low end of the 20-year range. We had not seen a 5% pullback until recently. In a normal equity year, you get about 2 to 3 pullbacks of 5% or more, and you actually get up to one of about 10%. So the narrative a couple of weeks ago making people anxious was this lack of volatility. Now we have some catalysts, obviously starting with Evergrande, looking at energy prices. And I think investors are basically saying which one is actually going to derail the market. But we still see opportunity here. Absolutely.
Kevin, you make the point that you've been calling for a 7 to 10% pullback. I don't know whether I don't recall that whether you told us that. But if that is true, is that just a buying opportunity for you?
Yeah, absolutely. And we were buying, Joe, during these pullbacks. I think to Kristen's point, these markets are like, volatile relationships that we just can't live without. Both require patience and careful discipline to come out of them profitably. But it's a buying opportunity every time we see pullbacks. So for September being down, it was a buying opportunity. Volatility has absolutely been the theme of the day here in October. We're seeing it across all markets. And if we see another 5% pullback in October, we'll look at it to invest in quality names for sure.
I don't know about that analogy. Kevin, did you hear that, Becky? That it's like a volatile relationship that you can't live with. Historically, don't we know those things don't end well many times, and that a nice, stable relationship, maybe boring, might be a better way to go? I mean, I don't know. Yeah.
No way, Joe. This is what we live for. This is when big money gets made. But in investing, as in life, you have to separate the raw emotions from the metrics. So I believe in the 3 R's: rules, risks, returns. You can't get caught up in the day-to-day fluctuations. You have to stay focused on the long term. You have to stay disciplined and have a rules-based approach. If you can manage risk, then the returns will take care of themselves over time.
The severe headwinds, and I don't even want to say them again, but both of you note that rates are going up, inflation's going up, debt ceiling, supply chain, COVID, Delta variant, China. That's a long list. You got any more, Kristen, to add to those? Those were Kevin's.
I'm sure we could add some more, but I think in terms of just portfolio positioning, the question is, what are you going to do about it, right? So if you're worried about inflation, that means that being in cash is punitive. It means duration is punitive. So you need to find other parts in your portfolio that are going to generate yield. I also think from like an equity standpoint, this is a time to lean into fundamentals and quality. So some people have pointed out, look at the valuations that we have right now. Well, those valuations have actually been supported by record high profits. So now is a time for security selection, leaning into quality, leaning into companies that have really strong balance sheets, been able to consistently grow their earnings, been able to consistently grow their dividends, which serves a really nice purpose in the portfolio, both in terms of reducing volatility as well as adding yield, which in this environment, as we know, is very front and center.